Hello and welcome. You're watching Morning Brief at 9. I'm Shweta Kothari. This is the show where we bring you latest from the world of business, policy, economy and stock markets. On the show today, we'll be joined by Amrish Baliga for the latest on economy. Also joining us on job trends and what to look out for will be Karthik Narayanan after this very, very short segment. You're watching Morning Brief at 9. I'm Shweta Kothari. Let's take a quick look at the headlines first. RBI Governor Sanjay Malhotra optimistic about India's economic recovery in 2025, focusing on financial stability and high consumer confidence despite global uncertainties. RBI's December 2024 Financial Stability Report highlights resilience of Indian financial system amid global risks, emphasizes strong macroeconomic fundamentals and healthy balance sheets. And industry bodies hold pre-budget meeting with Finance Minister urge tax cuts, fuel duty reductions and measures for employment sector. India's current account deficit narrows to $11.2 billion in second quarter of financial year 25, while merchandise trade deficit widens to $75.3 billion. And RBI's increased risk weights lead to slowdown in shadow bank loan growth in first half of financial year 25. Income Tax Department extends a Vivad Se Vishwas Scheme deadline to 2025, offers taxpayers more time to settle disputes. And RBI to introduce beneficiary name verification system for RTGS and NEFT transactions by April of 2025 to reduce errors and fraud risks. And Delhi Police IGI Airport Unit arrests 200 plus individuals for visa and passport frauds in 2024, marking a 107% increase from last year. And airlines must share foreign travellers' details with Indian Customs starting April of 2025 with penalties for non-compliance. You're watching Morning Brief at 9. I'm Shweta Kothari. Our top story at this hour, facing criticism from the government over Reserve Bank of India's focus on controlling inflation rather than prioritizing growth. The newly appointed RBI Governor Sanjay Malhotra addressed these concerns on Monday. In his foreword to the Financial Stability Report, Malhotra expressed optimism about India's economy, forecasting an improvement in 2025 driven by high consumer and business confidence. He emphasized that the RBI's focus will remain on maintaining financial stability. The Indian economy is expected to accelerate in the second half of the current financial year. Malhotra also highlighted a positive investment outlook with corporates entering 2025 in a strong financial position. Joining us on the show is Amrish Baliga. Amrish, good to have you on the show. Good morning. Are you concerned about RBI's inability to cut rates, because that is what government pointed to a short while ago, and its impact on borrowing and consumption? And what's your outlook for 2025, this being the last trading day, the last day of the year?
No, in fact, that's clearly one of the concerning things. But then again, RBI also cannot cut rates just like that when inflation is still decently high. Unless the inflation starts coming down, especially the food inflation, I don't think like RBI can go ahead and cut rates. But I'm hopeful that in the February policy, they may cut rates, possibly 25 basis points. I would be surprised if it's 50, but 25 is what I'm expecting. But then overall, if you're looking at the markets, if you look at the macro numbers, I mean, most of them have been concerning. And then as far as the earnings are concerned, I mean, Q1, when we saw a downtick, we thought it was a blip. Q2 was quite disappointing, and that's the reason we started seeing the correction in the markets, like sometime in October. And now Q3 earnings should start in the next 10 to 12 days. And I mean, again, like I don't expect that to be any better than what we saw in Q2. In fact, it will be worse than Q2. So because of which I think people are concerned, and because of which we are seeing this correction. And as far as the macro numbers, I mean, I talked about, look at the GDP, that's been revised downwards. Industrial production is down. GST growth has been flattening out. And like what I said earlier, inflation, I think that's still a big issue. Rupee has depreciated quite a lot, especially in the last 50, 20 days. If you compare to the last year and a half, it's been, I mean, very stable. But then in the last 15, 20 days, we've seen a decent amount of depreciation in rupee. And that's also quite concerning. So overall, because of this, I think the mood on the street, I mean, in the year end, as far as, I mean, and also possibly in the new year, maybe the next month or two, could be quite cautious to bearish.
You know, Amrish, I have to ask at this point in time, because it's like an elephant in the room. Everybody talks about it, whether RBI should now look at perhaps reconsidering how it calculates inflation, and whether, inflation in consumer items like food, vegetable, pulses should still be a part of inflation calculations, the CPI calculations, because as the government points out, RBI's inability to really, rejig and be able to provide some sort of relief to consumers has resulted in a degrowth and perhaps not enough spending, both discretionary and otherwise, on parts of, corporations as well as individuals.
Yes, possibly, because I mean, really, RBI cannot control a decent amount of this inflation, especially the food inflation. I mean, it's not possible for RBI to control. I mean, that has to be controlled through government measures. So I mean, I think it's time that it was sort of delinked, and RBI can go ahead with the rate cut despite high inflation on food. So I think that will actually trigger economic activity. So I think that change should be made, and let's see.
By when is your expectation for a rate cut in the coming financial year?
The total rate cut in the coming financial year, which is, FY26, if we talk about, I'm expecting at least 1%, which is like 100 basis points in FY26, and like I said, 25 to 50 basis points in the back. I think that could come in the February, the meet.
All right, so February meet there's an expectation of a rate cut. We'll of course have to see whether the new RBI governor will bring in some sort of bonanza for people. But stay on, Amrish. Another important story which is coming to light is, by the way, of the financial stability report that was released on the 30th of December, highlighting the strength of the Indian financial system despite global vulnerabilities. The report is based on the evaluation of the subcommittee of the Financial Stability and Development Council. It provides an in-depth analysis of the global and domestic economic conditions and the performance of scheduled commercial banks, non-banking financial companies, and the solvency of the insurance sector. The report emphasizes that Indian economy and domestic financial systems remain robust, underpinning a strong macroeconomic fundamental and healthy balance sheet. Now, Amrish, what's your outlook for the banking sector? Now, if you look at the trends that have emerged, balance sheets are looking healthy, margins are looking well, NPAs are under check. What sort of growth are you looking at as far as banking and financial sector is concerned?
No, I mean, if you look at the balance sheet clearly looks much better. I think it's the best sort of balance sheets we have seen possibly in decades as far as the banking space is concerned, especially the PSU banks. But I think, when you're looking to invest in the banking space, I think the other thing you should look at is the credit growth. And credit growth is not really happening as far as the expectations of the analysts are concerned. It's not happening at that pace because we have seen some sort of a slowdown. So unless, of course, we see this rate cut, I don't see credit growth, really taking off. So that's something to be watched out for.
All right, credit growth is something to be watched out for. But what's your overall outlook as far as banking pack is concerned, banking and financial pack is concerned for 2025?
I mean, I really don't see a major growth as far as the banking pack is concerned, but I'm more concerned as far as the NBFCs and the microfinance companies are concerned. I think that's where there could be a bit of pain, because we have seen a huge increase in personal loans. And that's where I think the pain would be, possibly in FY26.
All right. In fact, you're right. Another report that has come in, and this one's important. The Reserve Bank of India has noted a major moderation in loan growth for shadow banks in the first half of financial year 25, with growth dropping to 6.5% on a half-yearly basis by September of 2024. This slowdown follows RBI's decision to increase risk weights on non-banking financial companies lending to certain consumer credit categories, as well as bank lending to NBFCs. The impact was particularly evident in the upper layer of NBFC segments, while primarily including NBFC investment credit companies with a high share of retail lending. However, middle-layered NBFCs, excluding government-owned ones, continue to show strong loan growth, especially in their retail loan portfolio. Remember, on a year-on-year basis, credit growth in the NBFC sector slowed down to 16% from 22.1%. Amrish, that is a significant slowdown as far as NBFC sector is concerned.
Absolutely. But then at the same time, if we look at just the personal loans and the gold loans, I mean, the way they have gone up in the last 18 to 24 months, I believe there could be a lot of pain in that space, because I mean, I'll just take you back a bit on the F&O segment of the market, where SEBI was quite concerned as to the way the retail investors are losing money. I mean, the total amount of money which was lost in like F&O by the retail, I think, I mean, if I'm not wrong, the figure is closer to about 1.4 lakh crores to 1.5 lakh crores. I mean, where has this money come from? Basically, it has come from the investors' savings, as well as the sort of personal loans and gold loans they have taken to fund their market activity. So finally, I think there will be pain in this space.
All right, anticipating pain as far as NBFCs is concerned, but shifting focus now to perhaps what could bring cheers, and that is the budget of 2025. Representatives from various industry bodies met with Finance Minister Nirmala Sitharaman on Monday for the usual pre-budget consultation, where they made several key requests ahead of the union budget for 25-26, which is scheduled to be presented on 1st of February. Among the proposals was a call for reduction in personal income tax rates to boost disposable income for the middle class, a cut in excise duty on fuel, measures to support employment-intensive sectors. The industry groups also the global dumping of excess stocks by China, including in India, as well as challenges posed to food security, inflation due to the ongoing climate emergency. Those were some of the key areas that were discussed by the Finance Minister. Amrish, what is your expectation? If I were to ask you to jot down and share with us some of the key expectations that you have for the budget, now is really hoping that there will be measures to boost disposable income, to boost employment, and perhaps also, you know, the entire debate about bringing fuel under GST, cutting excise duty. Those were some of the key areas of discussion.
Absolutely. I think the first and most important thing for the finance minister to do would be possibly to provide that impetus to the industry. I mean, that can possibly happen through some sort of tax cuts. And especially, I mean, as far as the individual, taxpayers are concerned, I mean, they need to have more cash in hand. I mean, we are talking of inflation in single digits at about 5.5%, 6%, 6.5%. But then a person on the street clearly knows that it is not 6 or 6.5%. It is in like double digits when it comes to your home budget, because most of what you buy, the inflation figures are much, much higher. So it's actually hurting them. So they need more cash in hand, and that can be done possibly through some sort of tax cuts. So that's clearly one thing what I would expect. And as far as the industry is concerned, yes, I think there has to be something done to protect the domestic industry. And just like the way President Trump actually is talking about, tariffs. I think there has to be some sort of tariffs, to support the domestic industry.
Okay, and apart from that, there is of course the big expectation that perhaps there will be some sort of excise duty cut on fuel as well. Well, that is something that government does time and again, time to time, as and when required. But conversations around bringing fuel under GST, those are long pending demands now.
Yeah, but I doubt whether government would do that, because excise on fuel, I think, is one of the major sort of income for the government. And at this point of time, I don't think they would really do away with that. I think that can be postponed possibly for a year or more. And the other thing, I think, what we should look for is the sort of spend on infra. Because despite a decent budget last year, as far as the infra is concerned, we have seen that most of the spend has not happened. So we need to see this year whether the same thing would be added to the next year's budget. So we could see a really inflated sort of infra budget. And I think that's quite important and necessary, for the economy to in fact take off from here.
All right. Given that it was also an election year, perhaps those are some of the reasons that the government bodies are also citing on why there wasn't enough infra spending. Perhaps it will do better next year. I think the industry groups are also concerned right now, Amrish, and I think it's a valid concern given that there's been an excess dumping in India, in the US, and Donald Trump is taking it up big time by China particularly. That continues to be a challenge. What can the government do to really help on that matter?
Exactly. I just spoke about that there has to be tariffs against such dumping, and especially from China. So I think, the finance minister
any particular sector, Amrish, where you think tariffs are needed and needed now?
I think it is across, except for where, those materials or those commodities are used as raw materials for the Indian industry. I think for most of the finished goods, there should be some sort of anti-dumping sort of a policy as far as China is concerned.
All right, anti-dumping policies there, perhaps time to implement some of them. But shifting focus to another story which is coming to light by the way of India's current account deficit, which has shown a slight moderation in July to September of 2024 quarter, easing to 1.2% from 1.3% of the GDP during the same period in the previous fiscal year. For the first half of the fiscal year, the current account deficit stood at $21.4 billion compared to $20.2 billion in the same period of the previous year. This according to the data released by Reserve Bank of India. Remember, the current account deficit measures the difference between countries' exports and imports of goods and services, serving as a key indicator of its external sector's health. So it does look like India is making strides there as far as the current account deficit is concerned. Amrish, I want to get you back into the conversation. A lot of this current account deficit or trade deficit coming in favor of India has also been due to a lot of external factors that India cannot control. There's been disruption of supply chains. There are two active wars in globally right now, come to think of it. Is this an indicator that the fact that India is perhaps exporting more than what it is importing a sign of self-reliance going forward? Are you happy with the numbers that are coming in? What are you making of it?
No, to a certain extent, we can say it is a self-reliance because of which the imports are lower. I think the other reason also could be the sort of a slowdown which we are seeing. We are still seeing growth, but there's a slowdown of growth happening in India. So that could be one should be happy about. But yes, self-reliance is something which we should be looking at going ahead. I think that there should be increase in self-reliance, no doubt.
And before I let you go, as you mentioned, there is some sort of slowdown that we are also seeing. I think it's going to be a conversation as we move into 2025 as well. Consumption story, unlike how we started 2024, where we were very upbeat on how India is consuming, I think that tapered down and to a large extent towards the end of 2024. How concerned are you, and what is your expectation and hope for 2025? And this, of course, before I let you go.
No, I'm clearly concerned about that, because of which we have seen a major slowdown as far as the white goods space is concerned, FMCG is concerned. But again, we are hopeful that, first of all, the rural demand should pick up in calendar year 2025. And hopefully in the second half, we should see the urban demand also getting back on space, on track.
All right, urban demand should pick up. That, of course, is the hope. Amrish Palega, wish you a very happy new year. Thank you very much for joining us today.
Thank you, and wishing all of you a very happy new year and all your viewers too.
Thank you. And the Income Tax Department has also extended the deadline for its Vivad Se Vishwas Scheme by 1 month, pushing it from 31st of December to 31st of January of 2025. Now, this extension offers taxpayers more time to settle ongoing tax disputes by paying a reduced amount. Without the extension, the individuals applying for the scheme would have been required to pay an additional 10% tax. The Central Board of Direct Taxes, CBDT, issued a circular on 30th of December announcing the extension under Section 97 of the Direct Tax Vivad Se Vishwas Scheme, and this provides a major relief for those who are yet to apply to settle all the ongoing disputes, and now you have 1 more month. And the Reserve Bank of India has announced the introduction of new beneficiary bank account name lookup facility for both real-time gross settlement, the RTGS, and the National Electronic Funds Transfer NEFT systems. The new feature, scheduled to be rolled out by 1st of April 2025, will enable remitters to verify the beneficiary's name before initiating a transaction, and this will, of course, help in reducing the risks of errors and frauds. Currently, the system like Unified Payments Interface and Immediate Payment Services, the UPI and IMPS, already allows such checks. The new functionality will bring RTGS and NEFT platforms in line with these systems. The RBI has the task and has tasked the National Payments Corporation of India with developing and implementing the verification feature. It will be rolled out by 1st of April 2025. And in 2024, the Delhi Police IGI Airport unit arrested nearly 203 individuals for visa and passport-related frauds, marking a major increase of 107% from 98 arrests in the previous year. The crackdown, which targeted illegal immigration networks, involves the arrest of agents and facilitators who facilitate fraudulent activities. The IGI Airport Deputy Commissioner of Police highlighted that the operation aimed at dismantling the illegal immigration networks that have been exploiting loopholes in the system. And starting April 1st, 2025, airlines will now be required to share foreign travelers' details with Indian customs authorities. Non-compliance could result in penalties. The mandate applies to all airlines operating flights to and from India, which must register with the National Customs Targeting Centre passenger by 10th of January 2025. Now, airlines are required to share details such as mobile numbers, payment methods, and travel itineraries 24 hours before an international flight's departure. The new directive follows Passenger Name Record Information Regulation 2022 Act, which was introduced by CBDT and will perhaps help the customs to really identify people who are trying to evade the required law in the country. And time for a short break now. We'll be back with more on the other side. Keep watching News 9.
He said, Thomas, if it were not for my grandmother, who was my light of my life, I would have stayed back in the US and married the girl who I loved and I wanted to marry. He said, two things brought me back to India. Number one is that my grandmother, who meant everything to me, she took ill. And the other half was that grandmother used to always tell him, please understand, Tata stand for certain principles and normative values. At some point of time in your career, you will have to embrace it unfailingly and ensure that there is no deviation from the path which Jamshedji, the founder, had shown for the entire Tata family.
This and more. Streaming on News 9 Plus. News is now content. Subscribe and get free vouchers.
Welcome back. You're watching Morning Brief at 9. I'm Shweta Kothari. Let's take a quick look at how markets are opening up this morning. It looks like a sea of red once again. Let's pull that graph up on our screens. Nifty 50 down almost 0.3% at 23,565. Sensex down 0.5% at 77,890. Nifty mid cap also down 0.5% at 56,933. Small cap down 0.16% at 18,610. India VIX is up 1.3% at 1416. So those, of course, are numbers on your screens. Market opening at a sea of red today. Let's also quickly take a look at some of the stocks that are in focus. Looking at this map on your screens right now, it does look like banking pack is not reacting very favorably. HDFC Bank down 1%, ICICI Bank down 1%, SBI down 1.5%. Kotak Bank also down almost 1%. On your right, the IT pack there, it's a mix with Infosys down 0.5%. HCL Tech is up almost 2%. Tech Mahindra is also up almost 2%. TCS is also negative at minus 0.15%. Now, as far as energy and mineral sector is concerned, it's a sea of red with Reliance down 0.85%, ONGC down almost 2% there, Coal India down 0.6%. Consumer durables, all of them down and taking a beating. And how? Mahindra and Mahindra down 1.5%, Maruti down 1.3%, Titan 1.5%, Bajaj Auto almost 1.6%. Tata Motors, they're also taking a beating at 2.2% down this morning. Both consumer and durables as non-durables are down. Non-energy mineral sector is also down. Communications there. Let's quickly take a look at some of those telecom players. Bharti Airtel is also down minus 0.81%. So it's a sea of red there in the markets today. Remember, it's the close of the trading session today and markets are not reacting very, very positively. Second consecutive day of markets opening in deep red this morning. And we'll see if there's a change there as far as markets is concerned. But let's quickly talk about something that bothers all of us, affects all of us, and that is the jobs market. How has the jobs market reacted in 2024? What are some of the key trends to look out for? And what role does AI, automation in 2024 as well as 2025? To talk about all of that, joining me on the show is Karthik Narayan. He's the CEO Staffing Team Lead Services. Karthik, thank you very much for taking time out. Let me quickly begin by first question first, and that is, what are some of the staffing and hiring trends that you have observed throughout 2024?
Yeah, so I think some of the trends that we have seen overwhelmingly, especially this last year, is aided by the fact that post-COVID, I think a number of transformations are taking place across the globe, right? One is business transformation, different business cycles which are coming through, largely because of changing technology. Second thing is, I think even regulatory changes, ways of working, etc., and all that are really impacting the different trends which are taking place in workforce. So, one of the aspects which has really taken off this last year more than anything else is the rise of the gig workforce, right? And this is not just limited to what what normally we would see as e-commerce, quick commerce, or even delivery logistics. It has also taken on for professionals who are now part of platforms and who are now willing to kind of put forward the services that they have to offer because of personal and professional flexibility that offers them. So clearly there is a rise now, which is a significant trend of gig workforce, both in urban settings and in also in the delivery and the logistics segment. So that's one thing that we are clearly seeing which is taking place. I think the other thing which we also see in place is because of the rise of technology, I think specific skill sets which are coming into play, right? Earlier, and especially, but I would say in IT services, there used to be a lot of back office development work which India was known for. But I think the rise of GCCs is a very distinct trend which has taken place, especially this last couple of years, which goes on to showcase that India is now becoming a huge hub for engineering talent, especially around some of the newer technologies around AI, ML, cyber security, robotic process automation, and so on and so forth. So I think that's the second large trend that we are seeing, which is taking place in a big fashion. Right. There's a whole lot of micro trends, which are taking place, which I believe is going to significantly multiply, going into next year.
All right, I want to talk about those macro trends in just a bit, but let's go back to gig economy and gig workers, because you started your conversation with that. What are some of the key challenges and opportunities that you're seeing in this burgeoning sector? We've talked about gig economy, gig workers throughout the year. What, according to you, are the challenges and opportunities here?
So the gig economy specifically, I think it's good for us to understand saying what are the drivers, of gig economy, and how has it really kind of come about to be, and especially in India, why and how is it growing so fast? I think the number one thing is the fact is, in some way, the telecom revolution which has taken place over the last 2-3 years has significantly aided, especially cheap telecom, has significantly aided the penetration of, generally, I would say, telecom services, and more importantly, smartphone services. They're expected to be close to 1 billion users and close to 650 million, smartphone users, which means that now there is an opportunity and possibility to assign a task to anybody. So I think that's one aspect of it. Second, obviously, ease of doing work is continuously being focused and worked upon by the government. So I think whatever ease of regulations taking place is also, I think, aiding, as well. And third, of course, in the rise of some of the new age businesses around quick commerce, e-commerce, etc., and all has given this particular huge opportunity to kind of develop over a period of years. As we speak, our understanding is 17, 18. The gig workforce used to be hardly about 7 odd million. The expectation is easily 50-20% CAGR, and by 2030, this workforce is expected to go up till about 25 to 30 million. Right? 2.5 to 3 million. Right? So that's a huge jump, which is taking place. And I think some of it is at the lower end of the spectrum. Some of it is work, which is coming about because of the nature of work in some of these delivery and logistics that I spoke about. And in many other cases, it's really because of choices that individuals are making, especially being able to offer professional services on gig platforms. So I think that's really the trend which is taking place as far as gig workforce is concerned.
All right. In fact, one of the conversations of 2024 has been the treatment of gig workers, their protection, their social security, their survival. According to you, Karthik, have you made some strides at all towards formalization of gig economy and the lives of gig workers? What are the challenges that that area is concerned as far as gig workers and their employee benefit and their employment security is concerned?
No, you're right, Shweta. I think the number one challenge as far as gig workforce is concerned, because for a whole lot of people, this is perhaps going to be their first step into formal workforce. Important for all stakeholders to ensure saying not only from a wages and compensation perspective, but also from a social security perspective, they are treated in a fashion which is consistent with the law of the land. As we speak, though, there is very little regulation, especially with related to social security around gig workforce. I think a few states have, kind of come up with some sort of a regulation, especially around, social security for, this workforce. But we are largely expecting some of the new labor codes, which has been in the works for some time. Hopefully, if that kind of comes into force, I think there'll be a much larger, stronger regulatory governance around, workforce to be protected. Obviously, some of the challenges is a whole lot of these workers are not formalized, and hence there's a very large chance that they will not get the social security. They'll be impacted on possibly, healthcare services that some of the other workers who are there in the formalized sector will get, and hence there is a very large chance of them getting exploited. But given the, emphasis and focus which is being put upon by different state governments, and there is a healthy debate also which is going on as to how to kind of look upon gig workers. Our anticipation is, along with the new set of labor laws which potentially will get passed, I think there's some sort of a protection which will come even into the gig workforce. Having said that, Shweta, this is not just India situation. I think this is getting debated at the ILO and globally across different countries, because this is just kind of manifested itself over the last 3-4 years, and the size and scale of it has really taken all governments by surprise.
Absolutely, taken all governments, everybody by surprise there. Is this a shift? Is this an indication of the shift in the way people want to be employed today, Karthik? So an insight into people behavior. They want to be free. They do not want to be held back. They do not want to be working in an office from 9 to 5. Is this an insight into people behavior?
I think there are two aspects of it. Clearly, I think some of the job opportunities which are available at the lower end, and that is the aspect that I called out largely around, logistics, quick commerce, delivery, e-commerce, etc., and all that. I think the nature of the work is such that, it requires, part-time workers to be working. So and for many that would be first-time employment. I wouldn't really, call that choice rather than, individuals, getting into the first workforce with the first available job. I think the choice really is coming across, especially I would say in the professional services part of it, where there are several. When I say professional services, what I would mean is services that individuals are willing to offer, which could be something as simple as an electrician or even a carpenter at the lower end, to let's say people who would want to be consultants for short-term projects, etc., and all that. So what we see now is the rise of platforms which enable some of this to happen across a range of services. One is, again, I think different countries have, different trends that we're seeing. I think as far as India is concerned, I think there's a shift which is taking place. To a large extent, I would say there is still a preference for a formal employment to be working for somebody. But I think a whole lot of people who do have, the need to kind of balance their personal and professional life and are also getting adequately paid for the services they're offering. I think this is a welcome choice that many can make and are making as we see. So I would say at the lower end spectrum, I think it's perhaps not as much as a choice. It's really being able to get into the workforce with the available work which is there. But I think to the mid to the higher spectrum, depending on the jobs, including consulting advisory that you might be willing to offer for a shorter duration, I think those are coming up as well.
All right. In fact, one of the conversations we've also had is how AI and automation will affect jobs throughout 2024. At the start of 2024, when AI was being introduced, OpenAI, ChatGPT, there was a conversation around opportunities that AI will bring. But the conversation really steered in the direction of how AI is leading to job losses. In your assessment, for people to remain employed, what skills do people need and will need going forward to be AI ready?
I think the number one, I think the most important aspect is that it is definitely a lot of skills for which we had, individuals probably toiling hard are now getting automated, especially in the knowledge economy, and I would say more specifically in the IT services, right? So, for example, it's our understanding that largely around testing, which is a key component in software development, I think AI is going to automate a whole lot of them. So definitely some of the lower end jobs are going to get automated, and perhaps they're not going to be there. But this should not be looked upon as this cannot be looked upon in isolation, because I think similarly the technology is also going to kind of lead to newer aspects in areas where individuals can get involved. Of course, I think the single most important divide which is going to people is in the way they are educated to be able to use AI for their benefit. So let's say, for example, there is a rise of prompt engineering. Depending on who is able to ask what kind of questions, the AI is going to aid them or be a force multiplier or not be a force multiplier for individuals. But having said that, that's one aspect of it. I think AI is also going to lead to individuals being able to utilize it for the good of whatever work they are doing. So, creativity, digital marketing, I think all of these are getting enhanced because of the use of AI. So I think while it is definitely early days, I think a lot more automation might look like a lot of these jobs are getting redundant because of AI coming in. I think there's a lot more newer jobs which are kind of coming in across the spectrum, which will use AI as a force multiplier for that particular aspect and area of work to be done better.
Okay, so what are these new jobs where AI will be used as a force multiplier? What new jobs are you expecting AI to generate come 2025?
I think AI might not be like a direct job aid. I think whatever work that you are doing, let's say for example, like I mentioned, in digital marketing or even in content creation, etc., and all that, I think AI will be a tool which will kind of aid you to become better. I don't think so AI is going to be like a direct job, right? So, for example, there are literally hundreds of courses online for you to learn on prompt engineering and make yourself better in how you can exploit AI. Your ability to kind of, draft an article or even ideate on some new ideas, given the sheer plethora of information available online, becomes that much more better for you to be able to do it. So I wouldn't say there is a direct AI job per se, but I think your ability to be able to deliver to any job gets multiplied if you are proficient being able to use AI. I think at least in the short term, that is what is going to be the trend.
All right, let's take this conversation forward to startups now. Startups have had a difficult year. A trend that has emerged is that if startups do not have a path to profitability, if they do not have a clear path to profitability, they'll find it difficult to sustain. We've seen that with Byju's in 2024. It's been a churning year for startups. There have been far fewer unicorns. What are you making, or what startups will have in store as far as 2025 is concerned?
No, I think clearly, I think there's a few trends which took place, and I wouldn't, to be honest with you, wouldn't put a finger on any startups as to what they have gone through. I think definitely COVID and post-COVID period brought about a significant push towards, digitalization, digital transformation that took place. A number of startups kind of invested in these areas and they're really looking upon to encash on that. And therefore, which led to a whole lot of startups around this ecosystem getting spawned over a period of time. I think what has happened is, because of funding winter, which kind of came about, I would say late 2023, early 2024, most of these startups have now been asked to focus upon profitability, right? So there is no more, empty spending money just for customer acquisition, or projects which don't have a path to profitability. I think that aspect is definitely is more circumspect now with a whole lot of startups. So I would expect that going into next year, definitely most, if not all, startups are really focusing, depending on their stage, on being able to optimize on their cost, really look at customer acquisition, profitable customer acquisition, and definitely from the short to midterm period, look at saying how it is that they can become profitable. I think the past era of throwing money and doing customer acquisition at any cost is definitely taken a pause. No questions on that. And I think even investors who are putting in money in so many of these startups are really looking at it with caution. Unless you have a solid business plan and a path towards making money, I think it will be much more tougher to be able to raise funds and deliver on your startups.
All right, Karthik, before I let you go, for every prospective employee, what are some of the key sectors and segments that will do better, that are in focus come 2025? Given that, the geopolitical scenario is not very favorable, there are two active wars. In your understanding, from what's to come, what are some of the key sectors that will be in focus?
So Shweta, we have to really go by, sector wise, because there's no single, brush to paint. I think the really good part is that, India is a bright spot, despite all the geopolitical tensions everywhere going on. While the Q2 results have been, GDP results have been a bit subdued at, depending on the report you read, 5, for the Q2 one. But I think if you really go by, vertical by vertical, I think you'll get a different sense of it. I think the verticals which have really got impacted has been the consumer business, which is FMCD business, which has got impacted. But if you look at it, I think there are several verticals which are really strong on the India consumption story. Definitely, there's without doubt going to be a huge growth on the e-commerce, quick commerce space, going into next year. And we are seeing huge opportunities out there. We're also seeing opportunities in EV and EV infrastructure. I think that's also a huge positive, going into next year. We are also seeing positive trends coming out in agriculture and agrochemicals. I think that as a sector, hopefully with a half decent monsoon, I think that is one more area which is going to kind of grow. Some of the other industry segments we are looking at, which will have a positive impact, is definitely one area is logistics. I think that's another area which we expect will do better going into next year.
All right, those are some of the sectors that are going to do well, which will include agrochemicals, EVs and logistics. Perhaps those are sectors that will be in focus as far as staffing and hiring is concerned. Karthik Narayan, thank you very much for taking time out for joining us on the show today. And before we move on, let's take a quick look on what's in store as far as global stories and global headlines is concerned. Wall Street closes lower in light holiday trading as major indexes head towards strong year-end gains.
Double-digit gains.
And Federal Appeals Court upholds $5 million verdict against Donald Trump in a sexual abuse and defamation case. Nikkei retreats on last trading day of 2024 as investors lock in profits after nearly 20% annual gain. And South Korea orders emergency airline safety inspection after deadliest air disaster as investigators search for victims and cause. Boeing and Jeju Air shares drop sharply after a deadly crash of Boeing 737 operated by South Korean airline killed 179 people. Ukraine's leading mobile operator Kyivstar partners with Elon Musk's Starlink to bring direct-to-cell satellite connectivity to Ukraine, expanding mobile services by 2025. And the police in Nairobi disperses protesters against alleged abduction of government critics, with some demonstrators detained on 30th of December. Fire breaks out in a hotel near Bangkok's backpacker district, leaving 3 dead and 7 hospitalized. Thousands of protesters and dozens of tractors marched through Valencia demanding resignation of regional leader Carlos Mazon over deadly floods that killed 220 people.
Valuations can be frothy.
Going public is almost like what some of us would like to say is the holy grail, right?
IPOs are a trend, not a bubble.
Do secondary markets exist? Answer is absolutely yes, and it's been around for a very long time.
Valuations could be high or low, and valuations may correct over time, but IPOs are here to stay.
It is basically a graduation ceremony of sorts. It is potentially where a startup stops being a startup and starts becoming an enterprise.
The IPO space has just started in the past 24 months. The startup ecosystem has been around for 15 years.
Fundamentally, if you have a strong business and you have predictability of cash flows and you can actually give with a fair degree of confidence where the business is headed, the market will reward you.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest.
Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Welcome back. You're watching Morning Brief at 9. The Wall Street wrapped up Monday in the red as stocks ended the day in negative territory amid light trading volumes. As its holiday shortened week, all three major indexes are still set to close with impressive double-digit gains. Investors are now eyeing the final trading day of the year to see how the market caps off 2024.
Stocks closed down Monday on the second to last trading day of 2024, a year in which all three major indexes posted strong double-digit gains. The Dow finished about 1% lower, while the S&P 500 and Nasdaq did slightly worse. The Nasdaq, though, is on track for about a 30% annual gain, while the S&P is headed for a 24% rise over the past 12 months, and the Dow is up 13% in that time. Abound Financial Chief Investment Officer David Lott attributes today's action to typical end-of-the-year activity, along with a deterioration in stocks that began a few weeks ago.
You're going to get some rotation happening this time of year. People just automatically selling the winners and buying the losers as they rebalance. So you see some of those tech companies, kind of large cap growth in general, selling off a bit. Seeing even last week saw small cap actually do a little bit better on some of those days. So overall, I don't think that there's a ton to see there. Yes, we're used to seeing green this time of year, but ultimately I think we're losing a little bit of momentum going into 2025, and that's what you're seeing take place.
Stocks on the move included Boeing, which fell 2% after South Korea's acting president ordered an emergency safety inspection of its entire airline operation, following the crash of a Boeing jet in the country's deadliest air accident in its history. And American Airlines added 1.5% after broker Raymond James upgraded its rating on the shares to outperform from market perform, citing an improved revenue outlook at the carrier.
And a federal appeals court upheld a $5 million verdict against U.S. President-elect Donald Trump in the case which was brought from former magazine columnist E. Jean Carroll. A jury found Trump liable for sexually abusing Carroll in Manhattan department store dressing room around 1996 and later defaming her in a 2022 Truth social media post where he called her claims a hoax. The May 2023 verdict awarded Carroll $2 million for sexual assault and $2.98 million for defamation. While the jury did not find Trump guilty of rape, the decision marks another legal blow for Donald Trump. Remember, earlier this year, a separate jury ordered Trump to pay Carroll $83.3 million for defamation related to a 2019 statement. And that's all we have in Morning Brief at 9. Wishing all of you a very happy New Year. We'll see you on the other side. Keep watching News 9.
Hello. If your money is fraudulently taken by somebody or if a cyber crime takes place with you,
क्या हम कृष्णा दास गुप्ता जी से बात कर रहे हैं?
and you report it to the bank within 3 days of the crime, the bank is liable to pay you 100%. This is clear-cut guidelines.
मैं डिपार्टमेंट से बात कर रहा हूँ.
If you report it within 7 days, the bank is liable to pay you 50%. And if you report it in 21 days,